Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. Friday morning, Bitcoin is slowly creeping back towards $85,000 US. The miners have been down, but we don't think they're out of the race yet. And that's what we're going to be talking about in today's podcast to close out the week. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below. Do you feel like the miners are out of the race? Do you think the cycle peak is behind us? Or do you think there's more juice left in the tank here in terms of this rally? With that being said, let's get into today's video. Okay guys, Friday morning, a great looking end to the week, at least so far today in trading. The miners, Bitcoin are up and to the right. Bitcoin currently flirting with the $85,000 level, Anthony. The miners appear to be off to the races, really a sea of green with a few standouts most definitely.
Yeah, a good day today, good way to end the week. And yeah, Bitcoin price having a nice uplift today. It's got through the 84 and up towards 85,000. So let's hope it continues through the weekend.
Most definitely. Now, I had to pull a few screenshots for the mid-morning market update here, Anthony. Bitcoin seems to be finding some footing, moving through 82, 83, 84. And briefly 85,000. We're seeing a number of the Bitcoin proxies, miners, and MicroStrategy on this list now up above 10% or double digits to close out the week here.
Yeah. I mean, we've said before that there's a strong correlation between the mining companies and the price of Bitcoin, and today's no different. We've seen the miners pump. Bitcoin's up 4%, but you can see a lot of the miners are in excess of 4%, with some of them in double-digit territory there. You've highlighted MicroStrategy. Also, the fact I think TeraWulf are up quite well today. Marathon Digital having a good day today. IREN. Most of the miners actually are in positive territory. Digital's up as well and just released numbers, and we'll talk a little bit more about that in a second.
Yeah, that's what I was hoping you'd bring up, Anthony. Last I looked, I think around 8% for Digital. Now, we have Sam Tabar coming on the program next week. We're looking to get an update, obviously, on the numbers and the HPC story that's growing so nicely at Digital. I brought along a couple slides from their recently released deck alongside the earnings presentation here. And as you can see on the key investment slide, Anthony, there is so much going on at Digital. Really the theme of the earnings call as the HPC AI revenue now starts to really compete with the Bitcoin mining revenue.
Yeah, you go back to 2023 and, when they started to talk about this deal they had in Iceland, and for that year itself, HPC revenues was probably, less than 2% of the total revenue for the year. They were a Bitcoin miner in reality. However, 2024 is a whole different landscape. And Bitcoin mining represented 54% of the revenue in 2024. That's from 98% in 2023. So you can see that that reduction in the mining, the increase in the high performance computing, also the fact that that number is on 2024. We're already into the third month of 2025, and we know from the updates from Digital that they've had a lot more clients. When they started in this space, they had one client. And it was a good client. I remember, we talked about this at length when they first announced the 35 million contract, which increased to 50 million of annualized revenue with that one client. Well, I can tell you today they have over 20 clients, and that number is growing. So they're doing really well in the space. They've even bought their own facilities, and they've made some announcements today. But we'll get more and more of that on an update when we get Sam on the podcast next week.
Yeah, we certainly will. Now, one of the themes we've heard throughout 2024 into 2025 is this shift away from Bitcoin mining and this shift towards HPC AI. You've talked at length, Anthony, about the multiple advantages, how Wall Street and the institutional investors view the Bitcoin mining business compared to HPC AI, the ability to forecast and project revenue. We wanted to take that a step further, look at a few of the key Bitcoin mining metrics, look mainly global hash rate and difficulty. This is really supporting that transition. The economics of Bitcoin mining continue to get more and more difficult as these miners look for opportunities to source revenue on the HPC side of things.
Yeah. I mean, we've seen that, you look at the global hash rate, and we've got the chart there showing the 7-day moving average. And, you go back, over a year ago, it was around about the 500 exahash. And now you look at today and we're way over 800, heading towards 900. It's been growing constantly. And as not just we look at the North American miners, but there are, that only represents probably 35, maybe 40% of the global hash rate. The other 60% of miners are all over the world. And, miners in general are constantly looking for the cheapest power. If they can get that cheap power, stranded power, even free power, then they're able to plug in not just the latest miners, but they can plug in older miners, which may be a lot cheaper to buy. And that keeps the hash rate going. Where you see the pullbacks is generally around curtailment, where you've got some of the winter months there. Texas has such a large proportion of the amount of Bitcoin hash rate in North America. So the majority of hash rate for Canada and the US is actually based in Texas. And in the winter months in Texas, when the domestic requirement increases, Bitcoin miners shut off for those periods. So we do see that pullback there. They have reported it in recent months updates, because we just covered January and we're about to cover February now. So, miners are giving back hours to the grid so the domestic supply doesn't go unwavering when it's required.
You're certainly right. Now, the next chart we have here, also from Luxor, Anthony, shows the hash price, which is obviously a very critical metric for the Bitcoin miners, along with global difficulty. Now, we have seen a few decreased periods over the last few months for difficulty, but generally speaking, over the last year here, you can see these two lines diverging on the page, both of these presenting headwinds for the Bitcoin miners themselves.
Yeah, I mean, hash price is a reflection of the Bitcoin price, and you go back to April last year, you can see where the Bitcoin hash price was before the halving. It was about $80 a petahash, and if you look at where it is today, it's about $55. We did see it drop down after the halving into the sort of like very low 40s, even high sort of 30 range in terms of dollars per day per petahash. That's increased now. It's above the $55 now at the moment. So that's because the Bitcoin price is where it is at the moment. Bitcoin price needs to really gain some ground to give these miners, a bit of more cushion with regards to margins, because we've just had the whole set of Q4 earnings, or the last quarter of 2024, and the majority of Bitcoin miners, if you take away some of the benefits they can use in those earnings reports, like the valuation of Bitcoin HODL and use of the FASB rules regarding that. Not many miners actually made a profit from Bitcoin mining. And bear in mind that last quarter, the Bitcoin price rallied to over $100,000 back in December. Now we're in the first quarter of 2025, and the Bitcoin price has dropped down as low as 76,000. That's going to cause problems for some of these miners in twofold. A, the revenues are obviously a lot lower. Their costs won't have changed. The energy cost to mine won't have changed drastically. They're still required to use that same amount of energy. It's just the fact that the revenues they're achieving has been cut by about 30% of where it was in December. And then when you get round to actually looking at how the FASB rules will match the miners with the HODLs in this new quarter, If the Bitcoin price doesn't get above 93,000 in the next 2 weeks, that's going to cause a real problem for some of those miners with the big hodls because they'll be reporting effectively a loss. Whereas they had significant green positive earnings reports for that last quarter. So this is where we see this yo-yo effect now with the Bitcoin price being a volatile asset class and how it can impact companies like IREN and TeraWulf who don't hodl. We'll see the benefit, the fact that they're selling on a daily basis. So when IREN released their results, and they had some fantastic results for the last quarter of 2024, their first quarter of 2025, even with the Bitcoin price, averaging down towards the 80,000 for that 3 months, they're going to still probably show a profit because they were able to mine a Bitcoin lower than everybody else during that last quarter of 2024. And bear in mind, their hash rate now is operating close to their maximum of 31 exahash. So they're going to have the benefit of mining more Bitcoin. And therefore, when you look at costs per Bitcoin, those costs are spread over more Bitcoin than they were last year. So that's going to be a benefit to the likes of IREN. It'd be interesting to see how some of the other miners with the big hodls will end up reporting. But, FES bill rules work very well when Bitcoin price is rising, but equally, it's a reversal of that when the Bitcoin price doesn't rise as well as it did in previous quarters.
Yeah, you're sure right about that, Anthony. And we've got a slide coming up comparing the hodls of these companies. We can see the level of impact directly that this quarter end or Bitcoin price may have on these companies. Now, with that being said, you put out an article, it was published yesterday, Anthony, in Compass Mining, talking exactly about global hash rate difficulty and the overall production metrics for the month of February. So you're able to put together these great comparative tables, again, looking at the full array of miners in the industry. But one of the paragraphs specifically, you spoke around this topic on global hash rate and difficulty.
Yeah, and we, I talk, I mention this in most of my articles because it is a real impact to the miners. So in February itself, this is the month the article covers, the network saw, a shift in hash rate, in difficulty. And overall for that month, it worsened by 3.2. So the difficulty increases. It means that miners are actually physically mining less Bitcoin because there are more miners on the network. The global hash rate goes up, the difficulty increases, and that way every miner loses out effectively. So that difficulty impacted every miner. We can see that from what they were producing on a monthly basis in February compared to what they were producing on a monthly basis in January. And we did see it recover back down towards the end of February, but for the majority of February, for the first 3.5 weeks of February, that the difficulty was higher than it was in January. So that's an issue for miners. It's been eroding their ability to mine Bitcoin, ever since the middle of 2021, when China came offline and banned Bitcoin mining. We saw that drop in the global hash rate. But ever since that period, then we've seen more mining machines come on month by month. And every time that global hash rate increases, the difficulty is impacted and it means less production. And just to highlight that, as we've done previously, the difficulty over the last 15 months is probably the same as having another halving for these miners. So we've talked about the halving, your revenues are halved. Well, the difficulty is meaning if you're not growing hash rate, you're actually falling behind. And potentially it's like having another halving in the same year. And that's really what the impact of the difficulty has been for the last 15 months.
Most definitely some tough sledding this year for the miners. That's why we entitled this episode Down But Not Out, Anthony. So we've talked about the down, the share price, the impacts of halving, difficulty, the global hash rate, obviously hash price. All of these factors have brought down the Bitcoin mining sector in terms of share price and market cap. However, these companies are continuing to put out solid production reports. We talked earlier this week about the huge advances we're seeing in the ASIC efficiency side of things and the ability of some of these companies through those fleet efficiency upgrades and their power management strategies to really mitigate some of these conditions. So as we say, Anthony, the miners may be down right now, but we don't feel they're out of the race quite yet.
Yeah, and that's what we saw in February there, and obviously February was a big month. We had Trump, the White House summit, which Trump led there, and that was very positive. And so the biggest story during the month, other than the Trump the summit that was held at the White House, was the CoreWeave announcement that they'd secured this big deal with OpenAI ahead of CoreWeave's own IPO. So this, nearly 12 billion deal not only helps CoreWeave, it also feeds down to the fact that Core Scientific have a 590 megawatt compute power deal delivering 10 billion over the 12 years of the contract. So that was positive news for Core Scientific because we'd seen, news in the press about Microsoft maybe pulling back some of their investment in the AI business model. And that was trickling down into those companies that were looking at AI and thinking maybe this was not as big as everyone expected. But that OpenAI deal, they're looking to spend 100 million in the first year, while CoreWeave have signed a contract for 11.9 billion. That represents just over 10% of the deal itself. Now, looking at the month of February for miners, there was some really positive news for a few of the miners. We saw the likes of Bitfarms increase their hash rate for the month, so their daily hash rate changed by, instead of coming down with difficulty, their daily hash rate went up by 17.3%. CleanSpark also increased hash rate. Their daily rate went up by 10%, and even Marathon managed to increase their daily rate by 4%. But generally, across the board, there were some declines in day-to-day hash rate, and that really is the difficulty. And if you look at, say, Bitdeer at 3.3%, Core Scientific at 7%, that's higher because Core Scientific are going through this process of moving machines from current facilities to new facilities to make way for the HPC expansion. So that's a bit of turmoil within their period of doing this. So, we expect that to, occur over the next few months. DMG also just over 3% down, which is the difficulty. Hive down 3%. So you can see that common theme. IREN, one of the best operators, 2.5% down. Riot managed to again continue that process of increasing not just their energized hash rate, but their operational hash rate. Their decline was only 1.3%. They're starting to get back to where they need to be, and we'll talk a little bit on Riot's performance as we go through some of the slides. But all in all, February from a high view was a reasonably good month for the mining companies. And now we can start looking at some of the individual slides going forward. We'll start with the Bitcoin mined. Obviously, Marathon having the highest hash rate at the moment, had the highest Bitcoin mine, 706. But actually, CleanSpark are closing in and closing in on that hash rate, and they're only 2 or 3 months away from getting to their target of 50. And it wouldn't surprise me if CleanSpark overtook Marathon in terms of Bitcoin mining this year. Their focus is fully on Bitcoin mining. Marathon are not just focused on Bitcoin mining, they're focused on gaining infrastructure for their mining facilities. And at the same time, it looks like with their two directors who've got HPC background, they may be looking to follow some of the other miners into the HPC space. That gives a clear position for CleanSpark, who are just focusing on driving the Bitcoin mining forward. So I expect them to probably overtake Marathon maybe in the next 4 or 5 months from a monthly position there.
Yeah, it's interesting you bring up that race for the top spot between Mara and CleanSpark, Anthony. And looking down this list of Bitcoin mined in February, it appears we have a close race for first. Riot, IREN battling it out in the 450 range, and then Core Scientific and Bitfarms, despite those facility retrofits, still managing to battle out for that third tier position or the 215 range.
Yeah, and we will see some change to this table this year. We're looking at IREN, obviously they're looking to get to 50 exahash, and they could actually give Marathon a run for the money. They were the biggest hash rate growth for 2024 compared to the miners. And 2025, even though they're looking at HPC as well, they're going to grow from 31 exahash to 50 or 52 exahash. in the first half of the year. So that will certainly get them close to, in terms of hash rate position, to where Marathon are at the moment. And so they'll be vying for that third spot there. Riot have already said straight away that they're now focusing on HPC, so they're going to have their target's been brought down to 38 exahash. But if you go down that table, look at Bitdeer at the moment, only produced 110 during the month. That's with 9 exahash. They're looking to get to maybe 40 exahash by the end of the year. So look out for Bitdeer using their own mining machines to go up that table.
Hey, question for you, Anthony, and this is purely a guess, not financial information. If you had to make a bet for December of this year, which company is going to produce the most Bitcoin based on what we know now about their growth rates, who would you bet?
In December this year for 1 month,
Final month of this year, who will be the highest performing miner?
CleanSpark will produce the most Bitcoin in December.
So your bet's on CleanSpark, Anthony. I would say either CleanSpark or IREN if I were a betting man. Now, the next slide here talks about the rank by production in terms of exahash per second for the month of February. So this is another important metric and a great way to compare the miners apples to apples here.
Yeah, so this is how much Bitcoin each miner is producing with their hash rate that they've got operating at any given point. And, the miners will put out their total energized hash rate. So that's, how much they got plugged in. But they'll also then be accounting for the fact that some of the time those machines switched off. So miners are also now putting out their operating hash rate, which is a reduction of their total hash rate. If you look at the table there, you have the likes of, IREN, Riot, CleanSpark. Now, normally, Bitfarms and Hive top this table on a monthly basis. Those are the two miners that have achieved the last 4 years effectively 1 and 2 in every year. The first 2 years, Hive Digital were the top miner, and the last 2 years, Bitfarms have pipped them on both years. 2025 is getting a lot closer. And if you look at the top 5 or top 5 or 6 there, including DMG, there's very little separating them. So you go down to 15.8 Bitcoin per exahash compared to IREN at 16. That's very little different. So a miner can have a good month when it doesn't have to curtail as much and have a good month there. But in theory, because this is operating hash rate, these numbers across the board should be a lot closer. So there is concerns for those miners that are delivering less than, say, 15.8. Now, in fairness, some of the miners don't include an operational hash rate. So Marathon used to do, and they've stopped adding that one into their updates. Cypher don't do. Bitdeer certainly don't do. HUT on some months have included it. Core Scientific don't do. So maybe if those miners were including an operational hash rate, their figures would look a little bit more closer to where DMG and regarding Soluna, they also don't put in an average operational hash rate. They just put in their total for the month. So, but this is about production, and so IREN, Riot there and CleanSpark all achieving 16 Bitcoin per exahash in the month of February.
Yeah, really interesting to see the leaderboard change on that metric, and like you say, how closely that top group is now coming within one another each month, Anthony. The next one, rank by utilization. So this is essentially how much juice these miners are able to squeeze out of the machines they have. We're also hearing utilization on the HPC AI side of things in terms of how well they're able to contract out or utilize their GPU clusters. So this is one, Anthony, as we start to look at HPC AI on the website as part of the platform, maybe an interesting metric to look at for both sides of these companies.
Yeah, it is. Utilization. So we just covered the previous one, production by exahash. That there, because miners can put in their operating hash rate, that gives them a more favorable position than having to use their full hash rate. What the utilization does, though, it turns, it effectively says, well, you've told us you got, this amount of hash rate plugged in. So we know you should have produced this amount of Bitcoin. What did you actually produce? And therefore, that is effectively a percentage of what you should have produced there. So if you look at CleanSpark, they came out top in this one, and they were also in the top three of the production by exahash. So, as we pointed out, even on yesterday's podcast, CleanSpark do have good operating numbers. We're never going to turn around and make things up. They do things well operationally, and this goes to show the utilization is really good there. They're using the machines most of the time compared to the rest of the miners. DMG also 88%. That's good. IREN at 87%. And then you look at sort of go down the list then and sort of Bitdeer, Hut, Cores around the 70% mark there. We know Core Scientific are obviously, making way for HPC. So they're moving miners around. That affects utilization because if you're moving miners, you're not having them plugged in. So they're going to come out poorly during these months where there are some sort of changes to mining machines going from site to site, because I think they're converting 5 or 6 sites that were mining sites into HPC sites. So they had to find room for those miners at other sites that have been built. So there is some sort of logistical issues to get those all done in a seamless way. They're making a good deal of it. They're still getting 70%. And also the fact that utilization will account for curtailment as well. So it's not just about machines are operating. There's reasons for that gap between whatever they're achieving here in utilization and 100%. So it will be curtailment. It will be downtime because some machines need to be fixed. We know that. We've been to sites already now. We've seen the amount of issues that mining rigs have. I mean, we went to Denton back in June last year, and in the first half of 2024, one of their sites for Core Scientific had something like 11,000 work orders fixing miners on that particular site. It was a 150 megawatt site, but 11,000 work orders were going through that site for the first half of the year. And so that tells you when those work orders are being processed, it means the machines aren't operating. So that does impact on utilization, because if you can't use machine, it's going to impact that number there.
Yeah, it certainly will. And we're actually in the midst of planning right now, Anthony, a follow-up trip, a Texas tour, power mining analysis road trip, so to speak, targeting, I think right now around 5 of the miners. We have a map here showing our projected plans for November. So we'll keep you guys posted on that, but it'll be great to get down there, see some of these new facilities like Black Pearl, and also some of these newly converted facilities like Denton for the HPC use there. Now, Anthony, I wanted to pick your brain quickly on the rank by utilization. Obviously, as you just explained, virtually impossible to have 100% utilization for any company any month. Do you happen to recall the highest you've ever seen on this table in a single month? Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now.
We have seen miners get very close to 100%, but it's again in the months where you haven't got extreme weather conditions and they can just able to eke out more hash rate. Now, sometimes, you'll have companies who can maybe overclock mining machines and get more Bitcoin out that way, or underclock machines and obviously reduce their energy costs, if they do it the other way there. So there's lots of ways that number can change. But essentially, if you run the machines as they're expected to run, that's how the utilization calculation will come in. We know if you have, 10 S19s or 10 S21 miners and you plug them in 24/7, the expectation is you will earn a certain amount of Bitcoin. You do that comparison to what they actually produced, and that tends to then give you a utilization. But, some of these miners will say, we're at 98% utilization. Well, their production doesn't always suggest they were operating at 9%, because it's clear when you tell us your energized hash rate, irrespective of the machine you're using, it's about hash rate. So if you're using an S19 J Pro, which is 120 terahash, or an S21, which is 234 terahash, it's about terahash on the hash rate. It's about hash rate. So, it's not about machine's performance. The machine will perform at the hash rate it's designated at. So, Bitcoin will be rewarded on hash rate. So, you can have a smaller capacity miner, have 10 small capacity miners earning the same amount of Bitcoin as one miner that had the same hash rate as the 10 smaller ones. It doesn't, they're not working any less. They're just giving you hash rate. So it's always a good indicator, and it separates out when people start putting in operational hash rate because they want to look good in the fact that when they were able to mine, they were mining really well. This sort of then says, well, actually, let's see how you were utilizing all your fleet. And so you can't hide from this one here. So if you see a mine that scored really well on the first table and not so well on this table, that's where you can ask a couple of questions then. Yeah, and I think that for 1 month we had a mine, I think it was Marathon Digital, finished with over 100% 1 month.
Yeah, that's phenomenal. Great to see. And thanks for the explanation there, Anthony. Interesting to see how these metrics, again, to the point or essence of yesterday's video, work together, not using a single metric in isolation, but looking at the story these metrics together tell about the miners. Now, the next one, Anthony, Bitcoin HODL. So you spent a couple minutes in the intro there talking about the fact that a few weeks from now, we're going to be at the end of Q1, and we need Bitcoin to be in that $93,000 range, whether we're going to see unrealized gains or losses on these companies' HODL positions. This slide here gives you a great representation. Again, some were mined during the quarter, but generally speaking, of the impacts of that FASB accounting.
Yeah, absolutely. And you look at Marathon's HODL there of 46,374 Bitcoin. That's amazing. It's there's only Strategy, formerly known as MicroStrategy, that have more Bitcoin on the balance sheet as a public company. However, even if you just take today's price of 85,000, that's sort of just over 8,000 lower than it was at the end of December. And if you multiply that 8,000 by the HODL amount there of 46,000, that's going to give you around about, getting on for maybe 360, $380 million of unrealized loss at the end of the quarter on their income statement. Now, there's no way that Marathon, even with their 700 Bitcoin that they produced in February, which is probably giving them 56 million dollars of revenue over that quarter, you may be looking at a company that have achieved 160, $170 million, and then you have a 350, 360 million unrealized loss against that. That'll put them in the red for the whole quarter. And this is the issue we've got there. So it will impact, miners with a big HODL, especially when that FSB rule works against them. And in this instance, unless the Bitcoin price rises above 93, it's going to work against them. And we'll see this yo-yo effect as we go through quarter by quarter, because the Bitcoin price in general, if you draw a line from 2011 all the way to 2025, it looks like it's a nice 45-degree angle through all the points there. But if you look at it on a month-by-month basis, Bitcoin is really, really choppy. If you look at it quarter by quarter, I've said before, the last 8 quarters, most of these mining companies probably were profitable in 2 of those 8 quarters, which means 6 quarters they were reporting losses.
Yeah, and it's interesting, Anthony, as these companies decide to HODL up to 100% of their production, obviously they still have to pay operating expenses like staff, energy. We've had a few of the online analysts start to ask about the potential need to fund or source new funding for operations. Maybe a good topic for another podcast.
Well, absolutely. But, if you look at these companies that are hodling, and we've talked about, Marathon, Riot, CleanSpark, that if they're not selling Bitcoin each month, how are they paying for their operational and capital expenditure? Now, Marathon, Riot, CleanSpark, and IREN have been very, very good at utilizing the at-the-market offerings over the last 2 or 3 years to grow their size what it is now. CleanSpark have said they're not going to use the ATM until the share price reaches, I think, above $20. It's currently, $7 or $8 at the moment, so that's got a long way to go before they start using it. But Marathon haven't said, they've got a large ATM in place. IREN have got a large ATM in place, and Riot Platforms have got a large ATM in place. Plus, they've also been going down the other debt route and getting convertible notes over the period. But but Marathon and Riot use their convertible notes to buy Bitcoin and add that to the balance sheet. So it wouldn't be unreasonable assumption to make to say that Marathon will have to keep going to the market to raise more money to grow from where they are at the moment. Absolutely.
Yeah, great discussion there, and something maybe we'll spend a little bit more time on in subsequent weeks, Anthony. But that is unfortunately the downside of that HODL approach. And as you said, for companies like IREN Cipher, they're actually able to stabilize their revenue a bit more over the period as they sell each day. So with that being said, now we have Bitcoin mined per megawatt. Another great way to start talking about the business overall as we move into HPC AI, and again, comparing on a megawatt basis now.
Yeah, this will be a great metric for HPC because then we can really look at revenue per megawatt, and it doesn't matter whether you're mining Bitcoin or using HPC business models to raise revenue. You're using power, and power is designated in megawatts. So we'll be able to, use that revenue per megawatt and then do really good comparisons across all the miners, those that are pure play, those that are looking to be a hybrid, those that want to formally go more into the HPC space, and see what that looks like in terms of a revenue return per megawatt. Are they getting the most from their megawatts? And this is the conversation that these miners have been having now, probably ever since that first announcement by Core Scientific last year with the CoreWeave deal. That seems to have spurned a lot on. But bear in mind, Bit Digital were doing HPC a long time before Core Scientific announced that deal. They've been operating since the end of 2023, and as we just explained on the podcast, they're already probably earning more now during these months in HPC revenues than they are in Bitcoin mining revenues. Certainly in 2025, in 2024, it was just 54% Bitcoin mining, but in 2025, that will certainly change to HPC because they have a run rate from listening to a part of the podcast today from Sam Tabar on earnings of 100 million at the moment. So that's going to be far more than they'll achieve through the mining space there. But this table here is at the moment, and it really just looks at the mining because we're not getting monthly information from the miners regarding HPC, so it's quite difficult to do a monthly assumption on that. If they start producing that, then obviously we can change this table to incorporate that. But from IREN's perspective at the moment, they're getting the most Bitcoin from their megawatts that they're actually indicating. They've got 510 megawatts across their sites at the moment, and so achieving zero point 0.9 of a Bitcoin per megawatt, that puts them as the standout miner effectively. It does work against some of the miners in terms of HUT there. They're obviously only achieving 0.33, but they are also looking at hosting and management services. So once they start to increase their hash rate, and I believe they've got some of these, the latest miners arriving shortly from Bitmain, with a boost to get to, I think, 9 exahash and a really good efficiency rate. You expect to see that ratio there of 0.33 start to increase and move them up the table.
For sure. Now, you mentioned in the intro the impacts of difficulty in the halving on the miners. One of the best ways they have to mitigate that is fleet upgrades or fleet efficiency. So this table looks at exactly that, Anthony. You can see IREN most efficient with 15, HUT least efficient with 31.7, and everyone else in the middle.
Yeah, HUT. So I can tell you now, HUT and Bitdeer, we will see those efficiency levels drop significantly in 2025. The reason we've got the likes of IREN, CleanSpark, Marathon, Cipher, all at the most efficient mining machines, they had their time in 2024 growing their hash rate. And 2025, we'll see Bitdeer and HUT start to grow their hash rate and start to use the more efficient miners there. And if Bitdeer are able to, by the end of the year, start incorporating some of their C-Miner A3 machines into their hash rate, then you'll see that that average hash rate come down drastically for them. But one thing I will say, this table has changed so much in the last 12 months. I mean, now you're looking there at the table, and probably the average is getting close to about 20, when really, if you go back a year ago, there wasn't many miners under 20. I don't think there were any under 20. So we are seeing a lot of miners having to buy the most latest machines because of the fact that the hash price has been reducing ever since the halving because of difficulty too. So if you've got the most efficient miner in your fleet and you've got access to that cheap power, that enables you to keep Bitcoin mining. If you don't have the most efficient miners, it means you're paying more for your energy and it's reducing your margins. So, IREN had the best or the lowest cost mine per Bitcoin of all the miners in that last quarter of 2024. And the reason is they've got the best efficient fleet and access to really cheap power. Maybe not the cheapest power, but certainly one of the cheapest powers, literally just over 3 cents a kilowatt hour.
So, a lot to consider, Anthony. Only 2 months into the year, but already starting to see some strong numbers out of the miners. And again, rallying for those top positions in all of these categories.
Yeah, we're only end of the month too, but what we've seen already is a sort of like a changing of the guard potentially. I was probably expecting Hive and Bitfarms to be leading after 2 months, but we're also seeing now other miners come into that fold there. Riot are currently, operating in first place, followed by CleanSpark, followed by IREN, and then we have Bitfarms and Hive. But if you look at the amount separating the top five, even the top six, if you include DMG, it's very, very small. So if one of those miners has a good month over the next few months, that could really change those rankings around. It's a lot tighter in 2025 than it was in 2024. And 2024 ended really, really close too. So, these miners are obviously trying to eke out as much Bitcoin as they can with the machines that they've got in place at the moment.
They certainly are. And as we say, down but not out. So, another section we wanted to cover here before the week closes out, Anthony, is just some of the headline news stories over the last few days. Again, overwhelmingly positive, as we've continued to say throughout the last maybe year or year and a half here. The first one comes as essentially talking about Trump administration, with a White House official sharing with a room of crypto industry leaders this week that there should be no limit to the size the U.S. government's strategic Bitcoin reserve can grow to. In addition to that, obviously, with many of the online or crypto Twitter accounts picking up on this story, the other interesting one, Anthony, again, along the lines of the strategic Bitcoin reserve, a great showing in Austin, Texas, on behalf of Gemini, putting up the world's largest drone display in the shape of a Bitcoin to really celebrate this historic milestone for the orange coin.
Yeah, absolutely. It looks pretty impressive from the image there. I've seen some of these on the New Year's displays when we looked at, I think, like Singapore and London, where they use these drones to welcome the new year in. But this looks fairly amazing, to be honest with you. And that's created by drones. I mean, obviously, it must be all computerized to format in that way there. But it's a really good image, and it's great to see that the White House summit went very positively. We just hope that that falls through. Then we see the states also now move towards this Bitcoin reserve, and the buying of Bitcoin continues to grow as adoption increases.
Yeah, you're certainly right, Anthony. And the difficult thing with a lot of these headlines and stories or tweets is how to substantiate what's true versus false and what level of certainty these outcomes will have. Now, if you take a look at the actual numbers, you follow the money. We've talked about World Liberty Financial, Anthony. This is Trump's personal family connection or business on the crypto side of things. We're also seeing whale activity picking up once again, with market whales returning to the space to take advantage of these sub $80,000 price points. In addition to that, MicroStrategy looking to raise up to $21 billion. So although the stories, the headlines, the words may be difficult to fully substantiate, the actions and the behavior we're seeing, can see on the blockchain is really proving otherwise.
Yeah, absolutely. As I said, we've had so much positive news in this space over the last 15 months. And the price at the moment, even at today's prices, you think about the mining companies. We talked about the likes of Riot and Marathon purchasing Bitcoin when it was over 100,000 per coin. And Strategy have been purchasing literally every week for about the last 3 or 4 years, growing their immense HODL to very close to now 500,000 coins. So there's no shortage of good news. We're not happy the price is obviously where it is at the moment, because literally less than 3 months ago it was 109,000, and we thought, that would give a good pathway for 2025 to grow significantly further. But we know that Bitcoin can rally very, very quickly. Look at the previous cycles during the bull year, and 20, 30, 40% changes can occur in very, very short space of time. So I've been sort of adding a little bit of Bitcoin at these prices. I know you have as well, Bryce. So I'm going to continue to take advantage of these prices where it's under 100,000. I haven't sold any since I started buying 5 years ago. So hopefully, that'll lead to a positive future.
Let's hope. And yeah, great opportunity to continue to dollar cost average into both Bitcoin and the miners, which again, in terms of share price, are down and have a little bit of ground to make up to get back to those highs we saw in December. So with that being said, Anthony, some light at the end of the tunnel, a nice green finish to the week, at least at the time we're putting this one together. Hopefully Bitcoin can have some strength over the weekend, and we'll see you guys back here Monday.